to justify what they're doing when the legislators, say one thing on Monday and quite another thing on Friday. And I think we're all victimized by this kind of apparent illusion that we are getting informed about what's happening when the deeper questions aren't being raised. Let me give you just 2 points on this. After the Depression in the United States, there was a Pecora Commission, which was appointed by FDR to investigate the causes of the Great Crash of '29. And they were able to bring bankers in and force them to testify under oath to try to get at the truth to some degree. We need a Pecora Commission globally. We need an investigation with some kind of subpoena power to try to get access, not just to what people say, but their emails and their internal documents to actually reveal what happened here. When you're talking about a loss of this magnitude and the impact on 200 million people who have, who are going from $2 a day to $1 a day, we need to really find out about this, and we need the media to recognize its own limitations to some degree. And I don't think we do enough. We think, yes, right, we'll just follow our normal reporting, procedures in a crisis like this, and I don't think they're adequate to finding out all the facts. The second point is Sub-Saharan Africa. I was just in South Africa 2 weeks ago, and they announced that 500,000 people had lost their jobs since the crisis began to impact in South Africa, that the deficit there is doubling, which means cutbacks in education, health care, and everything else that they desperately need. And this is directly affected to this financial crisis, although most people in South Africa had thought that they had escaped it because it was sort of a slow-motion crisis that hadn't affected them yet. So I'd like your comment about what we can do to really get at the deeper truths here, which so far have eluded us.
I know you want to come in here, and I think then we've got to maybe go to Steve on this too, and we'd like the regulator on this. Is there like a specialist sort of skill for financial journalists rather than general journalists?
I really want to address a number of issues that Danny's thrown out. The first thing is, where are we going to get the information? So, even analysts under media blackout will utter the words deep background and off the record. It is then up to the journalist to track down someone who will say the things on the record. But I promise you that if you have a source that you have developed over a number of years, they will tell you what's going on. Not things that necessarily will get them in trouble with the SEC, not non-public material things, but there are things that you will be told. The other thing is, I guess we think about who's to blame for all this. It's our entire system, right? It's everything. Everyone was greedy. Everyone I talked to at every presentation of homeowners in Rotary clubs in Tampa or Asheville, North Carolina, or wherever couldn't afford to buy the homes they lived in if they had to buy them again. Everyone was happy their home prices were up. Everyone. And so everyone is to blame. All the people who had home ownership that were happy to own the homes, that they were involved with it, any individual stock owners. Again, if the price of if the Dow was now 16,000, none of us would be here talking, and no one would care that there were imbalances. I promise you, no one. The last thing I would say, for if we talk about different economies, on a scale of 500,000 lost jobs, if we think about how many jobs are lost in Europe or the U.S., I think that's like 1 month of lost jobs, not 2 years. So there are jobs being lost everywhere, but it's really a matter of scale.
Karel, are the regulators actually
Yeah, I'm not a regulator, I'm from a think tank, but of course I follow a regulation. But I mean, first of all, let's say on your question, let's say what you need to do, let's say just asking yourself all the time, whose interest do I serve? If I cover this story, or I follow this. I mentioned this to Nikki Tate, whom I know from the FT. I said, why is your coverage so biased? And she said to me, look, that's the only source we hear. But then I think your task as a journalist is to say, look, to put the balance somewhere in the middle. If, for example, on the study which was published yesterday by the European Parliament, their big source of, let's say, the disastrous effect this directive would have, let's say, on European competitiveness of European financial markets, according to them, would cost 2 billion euros or so to implement it. But I said, look, try to see the macro picture. What was the cost of this crisis? We don't speak about 2 billion, we speak about 2,000 or 3,000, 3 trillion. That was the cost. So, and what will be the benefits of regulating them? At least we probably will see what is going on in the markets, and probably we will be capable of preventing what is going on. So I think, let's say, you need to combine as well, I mean, there's so much interest at stake, let's say, all the time. Let's say, try to see, would it be true what they're saying? Let's say, would it be really right? With the broader, the macro picture. Let's say, what is really going on more broadly into financial markets, and why would this really be bad, let's say, if these people were regulated?
Quickly on this one.
I think two things. Sources, I agree with Jay, absolutely key. Unless you've developed the sources before the crisis, you're never going to be able to report on the crisis because they're going to clam up, and you need to go to deep background, and not just in the banks, but also in the policymaker side too. That's really the only way to get a handle of this. I don't think it's necessarily hard to see what's going on. What's hard is connecting the dots and seeing what the big context of it is. So I think that's one of the ways, that it's possible to break out of that. But the other thing I'd say is that, getting the broader context of it and what it all means for the future, looking at, what the broader meaning, I think is proving more difficult because people want to forget about it. It's a bad thing, it's a terrible thing. Now, maybe it's over, maybe it's not. We don't want to think about it anymore. And I feel the impetus that started for reform, the impetus for making any major changes is weakening because people really have been, exhausted by the crisis. We've got over the worst. And in a way, what might have been predicted would happen, a fundamental reevaluation, as happened in the 30s, of the system, really, I don't think is happening. I think people are saying, well, we'll make a few somewhat minor changes in regulation. Looks like everything's coming back to normal, and let's just hope for the best. And so I think that's a major problem in trying to do more in-depth analysis of where we're going from here.
Now, Melisande, I know you're looking at ethics for journalists, general journalists and financial journalists, but tying in the regulatory issues, the state of the market, all that, surely financial journalists are, in a way, a special case. Do they fully understand what they're dealing with in terms of the ethics of how they report?
I think a huge question is training, that they don't. I think financial journalism requires a high level of training that is perhaps not required in other levels of journalism. However, it's what I was saying. I think if the reporting remains focused, I do not think it creates too much of a risk for destabilizing financial markets. And I think the error of journalists is to think they're policymakers and try to have that voice. And obviously, audiences will listen to them, but it's not their role to do that.
So maybe there's also a need for the regulators, for the economists, everybody, and the public relations people are not here today, but they should probably be talking a bit more. Jason, I'm going to come back to you in a minute because we've got lots of questions. Karel.
Yeah, my name is Carl Gustav Linden. I'm a business reporter in Helsinki, Finland. A question with relation to this, and actually I think is proposed for Karel, is if you look at systematic risks and assessments, do you see media, should it have a role in these analysis of systematic risks? After all, people say that there were no manias or panics before media.
What are you saying the media is causing the panic? Contributing to it?
No, let's say, but if the media is not doing it, we'll see it in another way, and we will see it later. But of course, they have a big role, let's say, to be very close to the source, let's say, to explain to what is happening. But again, let's say, if I mean the macro picture, I think what many people, for example, in business, hardly do sufficiently is just take, for example, the monthly bulletin of the ECB and look at the latest data. Over the last year, for example, consumer credit growth, you could see all the data in there. There are only a few doing this. It's in fact very simple. Just take the bulletin, look at the data, and interpret it. And this is for me, also for me personally, fantastic journalism. If somebody comes out like this, and nobody has seen it. And sometimes there are papers out there with the IMF, with national kind of central banks, like for example one which was published by which really also surprised me, by the Bank of England last week. The cost of the crisis compared to the UK, the US, and Europe. UK, the cost of the crisis is 80% of GDP, including liquidity provision by the Bank of England. US is 40% of GDP, and the Eurozone is 20% of GDP. If I saw this, I said immediately, the city is dead. London will never become the city it was before the crisis. But that kind of data, what I found personally most useful, that kind of people, let's say, which bring you data. That's what I used to like, for example, in The Economist, but I have the impression, let's say, The Economist is not so good anymore on these things. But that's, for example, why I read the FT, That's why, for example, for me, another very good source is the New York Times, which you have on your